Hey, welcome back to T2SMC Trader. What's up, guys? I hope everyone is cool. So, in this video, I would love to talk about the price action. It's gonna be a little advanced, and of course, you have to focus everything I'm going to tell around this video. Before going into the video, I would love to make sure something is very clear to all of you because when I will explain the price action, I will just talk about the price action. There will be no other talkings. Those people who are with me right now, they know that everything I'm going to show you over here, it was absolutely outlined every day through my live streaming, YouTube live streaming. But I'm saying this to those people who are going to watch this video maybe after 1 year or 2 years, where you can think that, oh, okay, everyone can do that as an hindsight. But trust me, you can check the same date and the same live streaming in that specific date. I have done everything in live, okay, beforehand, not as an hindsight. So guys, please focus to this video because if you can understand the things I'm going to show you over here, it will help you to be a consistent profitable trader. I believe so. Welcome back to T2SMC Trader. Make sure that you have pushed the like button before starting this video and you have subscribed to our channel if you are new. I'm going to explain the price action to NQZ 2025, which is the December contract for Nasdaq. Here you can see that this minus 2.5 standard deviation is marked over here. This market exactly came to this line and then it has been rejected from that line. I will talk about this standard deviation in a moment. Of course, it is important, though those people who are with me through that live streaming, all of you know that what is that line. But as I told, those people who are going to watch this video after 1 or 2 years, they don't know that how we got that lines. And as I will talk about all of this price action, it is also important for me to mark those standard deviation as well. By the way, from the weekly chart, you can see this was extremely bullish market. Okay, and then finally this market came to this specific line and rejected from there. When it has been rejected last Friday, actually, it came and stopped over here. Now you can see that there is an buy side imbalance, sell side inefficiency around here, where actually market came and closed so beautifully supported the 50% or the consequent engrossment of that bullish fair value gap. Instead of this bullish fair value gap, I would love to draw your attention over here to that specific candles wick. Again, why that is important to me, because this wick is more prominent to me, as well as this is the highest wick that has cleared all of the highs, as well as it has traded a fair value gap. Now you can say that, brother, there is no fair value gap as it was the all-time high. Okay, before this high appeared over here, it was the all-time high. I'm sorry, after appeared over here, it was all-time high, then market went higher and made a new all-time high. But if you think like this way, this was the all-time high, on its left there is no price action. I actually called this area as my joker and I can predict anything I want to predict over here. So I'm going to predict that there is a last fair value gap or kind of fair value gap or imbalance that has been traded by that week after clearing all of these highs. So I would love to mark that week and I would love to divide it by the quadrant levels. You can see here the quadrant levels. Okay, so here this is the upper quadrant, which is 75%. This is the 50% of that specific week. Again, that week has cleared all the highs and traded a fair value gap. This is the lower quadrant of that week. And if you take a closer look, this is the 50% of that week. This market exactly came to this standard deviation to 50% of that week. Again, it has also traded that bullish fair value gap or the bullish buy side imbalance, sell side inefficiency, exactly the 50%. So this is a beautiful finishing of that specific week. It was so beautiful actually. The last week conclusion was so beautiful and so much precise over here. So if why this information is important to you later, when you will see that this type of fall and you are expecting how far it can fall, you have to look for some kind of imbalances, as well as if you see this type of prominent week, you will mark that week and you will mark those quadrant level. If you see the quadrant levels are aligned with any kind of imbalances, then you will give the priority to that specific level. Here you can see the 50% and the upper quadrant was aligned with this bullish fair value gap, and that is why this 50% was important to me, and I have found that Beautiful reaction from there. Market exactly came to this quadrant level. Bodies closed at the level of the 50% of that buy side imbalance, sell side inefficiency. So from the weekly chart, it was so beautiful, so beautiful, and so beautiful because the all-time high prediction was so perfect. And then this market came here and stopped over there. I'm going to remove this fair value gap from my chart and will keep this quadrant level. Later, I will remove them as well when I will go much more lower time frame. But so far, all you know that market came standard deviation and then came to that specific weak quadrant level. First, when this quadrant, that week appeared, I will expect that it will be used as a resistance. When it has been broken, I will expect it will come and it will work as a support. Any of this level will work as a support. Now I'm coming to the daily chart, and from the daily chart, first I would love to show you the quadrant level, the standard deviation. Okay, so I will mark the standard deviation. Long time ago, when this market has cleared this low, after clearing that low, market went higher and closed above the 50% of this bearish order block. Again, why that was the bearish order block? So here, for the sake of this conversation, I'm going to remove this quadrant level, which you have seen so beauty, okay, so beautiful reaction from that week. So I'm going to remove it, and let me talk about that candle, why it was my bearish order block. Same logic over here. If I come here, that was the highest up close body close candle that has cleared all the highs and traded a fair value gap. Again, what type of fair value gap? There is no price action, so I have the joker, and I'm going to use that joker for making imbalances over here. So I'm predicting this has traded some kind of fair value gap. You can do that when the market is around the all-time high. Every single time market will come to the all-time high, you can use that candle as anything you can predict here, because this is the all-time high, there is no price action. Here I would love to mark that candle low and extend it to my right. This is my order block, and let me actually mark it as my order block here. And I'm more important level, the order block and the 50% of that order block, which is called the mean threshold. So I'm going to mark that mean threshold of that order block as well here. So need this anymore. This is the mean threshold or the 50% of that order block. Now, first of all, you can see that market came here all-time high. Then this specific candle has validated this candle as a bearish order block. This market came here, made us obvious liquidity. Okay, this low has cleared over here by a shallow run. Okay, let me actually show you that a bit clear way. This low has cleared over here as a shallow run. This is called shallow run or the obvious liquidity. Then this market went higher, trade that fair order block. Okay, more importantly, this order block has been traded, go back until to the mean threshold of that order block, fall dramatically. Finally, that shallow run has been taken again by another shallow run. Okay, so here shallow run means this low has taken by the week. Okay, just below that week it went a bit below. Again, this low has taken over here by another low, but there is no body, just a wick, a bit low, lower than that low. It is called the shallow run. Now here, the first time when the market has cleared that low, it has been built an obvious liquidity. Next time when this market has cleared this low, it is called the liquidity taken. So market has cleared the liquidity. Shallow run is expected for once, but if it is done by twice, then that means that the liquidity is taken over here. Now I would love to draw your attention here somewhere. Okay, as you can see, this low and that low are the relatively equal lows from the daily chart as well. So I'm going to mark them, and I'm going to mark it as my sell side liquidity. Why this is sell side liquidity? Because I have double bottom, triple bottom. I have a lot of bottom over here. So this whole zone, retail trader are seeing it as a support zone. Okay, so they are seeing this as a support. This is why I'm going to call it as a sell side liquidity. Even though this market has cleared that sell side liquidity after reacting from that order block, which is the bearish order block, look one more time how beautifully it has worked over here. First, it has built the order block, then market fall, validate this order block, come here, made the relatively equal lows or the obvious liquidity. I'm talking about this line, made the obvious liquidity, go back again to this order block, fall a bit, tap to this bullish fair value gap. Remember, this is the bullish fair value gap. So market has tapped to this bullish fair value gap over here. After tapping to this bullish fair value gap, come back again to this mean threshold. Nobody has closed above this mean threshold. Fall again, cleared that obvious liquidity, then started to go higher. So when this liquidity is cleared, I can start to think about the buy. There is nothing is wrong over here. To be honest, there is nothing wrong. But as I had this more sell side liquidity over here, I can't think about the buy until the body close above this order block mean threshold. Very easy concepts. Try to understand that. Maybe you will be wrong. 1, 2, 3, 4. Maybe you are going to be wrong 4 days, but you have to accept that 4 days. Even though we are not wrong, actually we have successfully framed sell setup over there because we are looking for sell. Why? Because we have this sell side liquidity which is so beautiful, and still this order block is not broken. That order block is not broken. It can be retested. That means when this market came here, trade that mean threshold and took that internal liquidity, this is the external liquidity which is still aside over here, took that internal liquidity, it can come back again to this order block, then it can fall again for this sell side liquidity. It is also possible. So I have to wait to see if the body can close above that mean threshold. If the body is closed above the mean threshold, I'm done for looking for sell. No more sell is valid. I have to start to look for the buying opportunity. Now, how long I will look for the buy? Where is the buy going to be finished? And then I will expect again the sell again. Okay, so until which level I should look for the buy? How do I know that? I hope that it's clear to all of you that order block has been broken over here by that specific candle. After clearing the liquidity, leave that sell side liquidity over here, closed above this mean threshold. That means the bearishness is done until that specific candle. When this order block has been validated by that specific candle, until this candle every day I'm bearish. Of course, this is some kind of internal price action, that is different matter. From the lower time frame, it was expected that it will come here to this mean threshold before falling. Everything was expected over there. I'm not going inside here because my intention to talk about this price action. But for explaining this price action, first you have to understand this price action over here. By the way, guys, I'm just trying my level best to make it easier to understand. But if you still have some confusion, let me know your confusion through the comment, okay? And even if you understand everything so clearly, don't forget to write down boom to the comment box. It can be a bit difficult to understand by the first time because price action is difficult, and as it is a bit advanced, you have to watch it maybe 1 or 2 times. So please give that time to this chart or to this video. Learn everything from this video. I'm explaining order block, I'm explaining liquidity, I'm explaining the direction, I'm explaining the bias, everything. So please try to focus over here. Now this candle has invalidated this bearish order block. Now I'm more interested to look for buy. If I look for the buy, how do I know that how far this market will go high and how far I should look for the buy? In that type of situation, I use from the daily chart low, high, lower low. Now I'm not going to call it ICT standard deviation because according to ICT himself, the leg has taken the liquidity is the ICT, standard deviation leg. I don't believe in this leg anymore because I have found that this leg is not kind of very specific. Okay, I need very specific things that I can know that how far maximum exactly specifically this market can go. In this type of situation, I actually mark the middle leg. First you have to understand why I'm looking for the buy down, because this order block has been invalidated and there is no reason to think that this market is falling for this sell side liquidity because the bearish period has been broken by that candle. So the bearish period is broken, market is now extremely bullish. That is why low, which is the first leg, high, second leg, lower low, third leg. I'm going to go for the second leg. From body, the lowest body to the highest body. Lowest body to the highest body of the middle leg, I'm going to use the standard deviation. When I'm going to mark the standard deviation, by the way, I'm going to actually remove these order block lines because I hope that it's clear to all of you guys. I'm going to remove them, and these lines as well I'm going to remove. Instead of those lines, I'm going to keep only this sell side liquidity, just this sell side liquidity. So when body to body I have marked, I have found some levels. Okay, 0.5, -1, -1.5, -2, -2.5. You can see this is -2.5. If I mark the standard deviation from body to body, the most or the strongest level is -1.5 standard deviation, which I am going to mark here. So when I will remove this standard deviation or the feed, you will be able to see there is a line which is minus what to say, I mean the 1.5 standard deviation. This is the most strongest line. Then -2 standard deviation, I'm going to mark that one as well because it will be important for me as well to explain the price action, and I'm going to keep it a bit thicker. Okay, this is -2 standard deviation and -2.5 standard deviation. I'm going to remove this fib now, and you will be able to see these three lines: -1.5 standard deviation, -2 standard deviation, -2.5 standard deviation. Now remember, this market, if it would love to fall, that means what is going to be the all-time high prediction after that candle when it has closed above the mean threshold of that order block. So I would love to mark a box over here so that you can understand that after this candle, I'm now looking for a buying opportunity. After that candle, I'm now looking for the all-time high. How far this market can make the all-time high? This is the first opportunity. This is going to be the all-time high. If it doesn't make the all-time high by -1.5 standard deviation, then -2.5 standard deviation is going to be the all-time high. At the same time, how do I know that it's not going to make the all-time high and market is coming until here? How do I know that? You have to look for the bodies from the daily chart, very specific from the daily chart. If you see the bodies has closed above the line, then you will expect that no, this can't be the all-time high. It is coming for this line to make that all-time high, which is -2.5 standard deviation. So now it's your time to use this as your support. This -1.5 standard deviation, it's your time to look for as a support, not resistance. Here, -2 standard deviation can make the all-time high as well, but it is very rare and I don't really like to mark this -2 standard deviation as my all-time high. Instead of that, when I see that -1.5 standard deviation has been broken, I keep looking for the buy until this -2.5 standard deviation. When it will come to this -2.5 standard deviation, I will start to look for sell. But before coming here, this market can give me some respect, okay, bit respect from this -2 standard deviation, which is in between these two standard deviation. This is the 50%, by the way. So here, as you can see, my first market came to this -1.5 standard deviation. After that candle, every day I'm bullish, every day I'm bullish, every day I'm bullish. Market came until here, then one candle fall a bit, trade this last fair value gap, a very specific fair value gap. You can see to that leg from here to until that high when this candle has been appeared over here, from that low to that high. Look from the beginning, just keep looking, keep looking, keep looking, keep looking, and this is the first gap. See here, this is the first gap. So the first gap is going to be my last gap over here. So I'm going to mark it here. This is the first gap. As well as I would love to add the volume imbalance over here because I have the volume imbalance over there. So I'm going to mark a box as well from that candle low to until this volume imbalance, which is actually called the fair value gap. After marking this, I'm going to remove these two line and that line. You can see this is a very specific gap. What is that gap? Last fair value gap to that specific leg. Now those people who are new here actually and you don't know what I called the last fair value gap, brother, I have already made a lot of video about the last fair value gap inside of my inside of my playlist. You can check them out. Okay, so after that candle close above the mean threshold of that order block, when the bearish period is broken, I'm now looking for the buy. This candle appeared over here, then the next candle is falling. I'm not interested to look for sell. I'm still bullish. How long? until this market doesn't reach to this line, which is minus 1.5 standard deviation. Still, I don't know that it is going to be the all-time high, or this market is going to break this all-time high and coming over here, which is minus 2.5 standard deviation. I don't know that. All I'm predicting, I'm seeing that can this market come over here. So every day I am bullish. After that candle, every single day when the market will fall, I'll take the buy. When the market will fall, I'll take the buy. Every day I will do that. So here you can see this market fall and reach until this last fair value gap over here, very beautifully reacted from there and then closed over here. So when this market is falling, I'm doing nothing, I'm doing nothing, I'm doing nothing. And then for the first time, it will give me the buying opportunity. I'll take the buy. I will take all the buy. Okay, no bearishness. Then the next candle, you can see it came here but failed to tap to this line. See, this line is not being tapped by the daily candle, so it left a bit portion open over here. Then next day market open, went higher again. Remember, until this is not going to be touched, I'm not looking for the bearishness. When for the first time it will touch, I will start to look for sell if the body doesn't close above this line, minus 2 or minus 1.5 standard deviation. Now you can see that market has closed above this line. When it has closed above this line, okay man, I'm done. I'm not looking for sell anymore. I will start to look for buy again. How long? Until minus 2 standard deviation. Why? Because it can come until this minus 2 standard deviation, then can give me some kind of reaction, a bit reaction from this line. But it is not going to be the reversal like this way. It's not going to happen like that way. It will give me the reaction, will trade some kind of bullish PDRA, and then it will go higher again, where until minus 2.5 standard deviation. So here you can see this market finally closed. I mean, it has closed here, so I'm looking for the buy again. When it will fall, tap to this line, I'm interested to look for the buy. Then this market came here. Then the very next candle, what I'm looking for, of course I'm looking for the buy. In that day, maybe I'm wrong, tapped over here, I'm wrong. I was looking for the buy, so market was not a bullish. Again, from the lower time frame, the whole case of scenario is different. I will get a beautiful buying opportunity over here, and I have got that. Those people who are with me, they knew that I was absolutely good with that buy from the lower time frame. Whatever, that day I am looking for the buy. But this day was actually so difficult day for me because it perfectly tapped to this minus 1.5 standard deviation, and I was expecting it is going to be respected from that line, but it's actually didn't do that. Instead of that, this candle has fall, trade this bullish fair value gap over here. This is the bullish fair value gap. So when it has tapped to this bullish fair value gap, which is here around there, okay, so in that specific day it has tapped to this bullish fair value gap. Now here is a confusion in that area. When it came here and tapped to this bullish fair value gap, can it keep going higher again? Some of you actually asked me this question, because maybe this is the fake breakout. That means one or two candle has closed above this line, now it will keep falling. No, it is not possible. If it is closed above the minus 1.5 standard deviation, when it is falling, every single time it will fall, you will look for the buy. Every single time it will fall, you will look for the buy, because finally this is going to be broken, and for the first time it will close again above this minus 1.5 standard deviation. You will start to look for this line as a support, and this market will keep going higher. So here there is nothing called fake breakout. One candle has closed, or one or two candle has closed above the line, and then it will start to fall. No, you can't think like that way. So finally this candle fall until here. Do I have anything over here? Now look at that. It's weak. This week is very prominent week, and that has cleared this low, that low, where from the lower time frame you will see a lot of actually liquidity over here, a lot of liquidity, okay, that has been cleared by that week and traded this last fair value gap. So this week quadrant levels are important to me. So that is the quadrant level over here. You can see upper quadrant, market has tapped to the upper quadrant over here. Bodies has been respected with that bullish fair value gap constant crossment. So in that specific day, I wanted to see that this candle is not going to close below the constant crossment. Instead of that, it will keep going higher. Why it is important? Because first of all, you can see it has actually traded the last fair value gap, right? The last fair value gap has been traded over here so beautifully. Now it should give me the speed toward that at least minus 2 standard deviation. So I need the body. Remember, body will tell you the story. Body will always tell you the story, not the week. So here bodies are important. How this gap is going to be traded by the bodies. If the body close below the consequent crossment after trading the last fair value gap. So last fair value gap has been traded already. Now this is a new bullish gap. It should be the bodies has to be respected with the upper portion of this gap. I can maximum allow the body to close exactly to the 50% of this gap. See this gap? Maximum to the 50% of this gap. I can allow that. But if when the body will close below this consequent crossment for a longer period of time, I will expect the consolidation. That means this market is not extremely bullish anymore. It is gonna be the consolidation because the bullish period is not going to be respected the way I'm expecting it should be respected. In that day when this market was falling, we had nothing to do. Then finally market when came to this upper quadrant of this specific week, the upper quadrant, we started to look for buy, and there was a beautiful buy. Body has supported here. The next day again market fall a bit, again a week that has cleared all the lows as well as traded a fair value gap over here. That weak quadrant level is important to me, so I'm going to mark that quadrant level as well. So here I'm going to mark that on as an upper quadrant so that later you will be able to see that it has traded the upper quadrant. So this is the upper quadrant. Let me remove this one. There is a line. Okay, so let me actually change the color and the 50% of that week. So you are seeing something very good or something very common. First traded the upper quadrant, then traded the 50% of that week. This week, which has made the manipulation for that week, that candle. This candle doesn't have any wick. So this candle open started to go higher. There was no manipulation. Now, if you know ICT PO3, if it is a bullish day, first market will open, the manipulation, extension, and then reset. Now, if you see this candle, it just open. This portion is not there. This portion is not over there to that specific candle. It's not over here. Okay. Then market come until here, which you can see here, and then fall and then close here, which is you can see here. It has closed over there. So everything was perfect, but this manipulation was missing from that specific candle from the daily chart. So what happened actually when this market was falling, finally it has traded both that upper quadrant level, did the manipulation for this one, okay, this candle, just the manipulation. So now I'm expecting this market will work with the upper portion of this gap. But why that week actually fall until here? Because first reason, this candle didn't finish any kind of manipulation. I will show it here as well, so you'll be able to understand. Just now focus over here. This candle doesn't have any manipulation week, so this market has fallen. It should work with the upper portion of this gap. First reason why, because this is a last fair value gap that has been traded by that week, so it has to work with this gap which has been created after the last fair value gap. It has to be work with the upper portion, but week did the damage to finish the manipulation of that specific candle as well as to trade this weak upper quadrant level. Market did that. Next day market open, trade the 50%, which is called the last fair value gap. Again, if I see this type of prominent week, the 50% of that week is called the last fair value gap. Exactly tap to this last fair value gap, market went higher, traded this minus 1.5 standard deviation, respected. Remember, it has been respected. Nobody has closed above this line. So until this body is not going to be closed, I'm not going to expect the run toward that minus 2 standard deviation. First, the body has to be closed above this line. Next day, what happened? The same case of scenario what you see here. No manipulation. Remember this manipulation things or the PO3, ICT PO3. This candle open, went higher, closed here. So all of the things I have found from that candle, but this manipulation is missing from that candle. So very next day, first, what this market has done, it came here, made the relatively equal lows from the lower time frame and closed above this minus 1.5 standard deviation. So this specific day was a day to confirm that, brother, I am bullish now because I have closed above this minus 1.5 standard deviation. So you don't need to think about the consolidation or the reaction from minus 1.5 standard deviation anymore. Now you are going to get the expansion toward that minus 2 standard deviation at least, then finally until here. That is the candle which has confirmed. It just confirmed. It didn't finish any job. Now if you look at that candle, what is that candle? It is called Tuesday candle. Okay, to the bottom here you'll be able, that candle is the Tuesday candle. So Tuesday candle is a manipulation candle. Market fall, took that low. I mean, it just, let me show you this, you will understand after this low and that low, it has built a relatively equal lows where it should done the, what to say, I mean, the manipulation. Market has to take previous day low. Market didn't do that. Instead of that, it is telling me that, brother, even though I have closed above this line, I'm not keep going higher without doing the manipulation. The manipulation has to be done by Tuesday. I didn't do that manipulation. Instead of that, I leave the support over here. From your lower time frame, from 15-minute chart, 1 hour chart, you will see beautiful sell side liquidity or relatively equal lows over there. So I have left that, what to say, the liquidity over here and confirmed you that I'm going higher. I have just confirmed you. But remember, before going higher, I will do two job over there. What is that two job? First job, I will make the manipulation leg for that specific daily candle, as well as I will take the liquidity, which is I left over here, so that you can think that I'm not going higher without clearing that liquidity. So at the beginning, when you will see this is falling, don't think that I'm going to fall. I am going higher, but before falling, sorry, before going higher, I'm just going to finish the unfinished business. At the same time, if you look at this thing where this candle has did the manipulation, it has to trade something, right? Some kind of bullish period. It has traded that quadrant level of that week. Now I'm not showing you this gap. This gap is called the entry gap. Here this candle actually tapped to this entry gap. Just I'm not showing it to you. Instead of that, I'm just uh, trying to draw your attention to the upper quadrant of that week, so that you will be able to learn this week, importance of the week. Okay, so here you can see there is no that type of week, because that was the most prominent week, the lowest week. Like here, this is the lowest week. All of this price action, this is the most prominent week. Here I have that type of prominent week. That week 50% has been traded by that candle, right? So I don't have any week over here. Instead of that, I have this bullish fair value gap. Remember, after clearing the liquidity, market can't start to run. It is not possible for the market. So what market will do, after clearing the liquidity, it came back again to this gap over here. Now if I mark the quadrant level of that gap, here it tapped to the upper quadrant of that gap, then it went higher. Now it doesn't need to trade this one, because the all the things have already done over here. Nothing is important over here to this gap anymore, because all of these weeks has been traded so beautifully. All it needs to do, it should tap to the top of this gap, and then it is started to go higher. It fall a bit lower until the rejection block, which is here, this candle low or the lowest low. This is the rejection block. Actually, let me mark that line, so it will be easier to you to see the beauty of this price action. This is called ICT's rejection block. Tap to this bullish fair value gap, to the top of this bullish fair value gap. More importantly, trade the rejection block. Just the opening of that candle, sorry, the closing of this candle, which is the rejection block. Exactly tap to this rejection block tick by tick, and then boom, market closed over here. While it has closed over here, what it has done, it has built the buy side liquidity. Now look, this high and that high, they are the relatively equal highs. This relatively equal highs has been cleared over here by a shallow run. So previously I have shown you the shallow run. Remember here, this low has taken over here by a shallow run. Nobody has closed below this low. Again, this low has taken over here by another shallow run. Nobody has closed. Even though here nobody has closed, but liquidity is taken, because one shallow run, two shallow run. So I don't need the body close below this low. Just a shallow run is more than enough for marking it as a liquidity taken. That means liquidity is gone already over here. If the body close below this low, that means clearly there is no more liquidity. There is no liquidity. But too shallow run will mark that it's done. So over here you can see this high and that high, they were the relatively equal highs. After clearing this liquidity, tapping to that rejection block as well as the bullish fair value gap, marking that manipulation leg for that specific candle, market came here, took those highs by another shallow run. What is that? Obvious liquidity. Next day, market open, went bit lower, come back again to -2 standard deviation. Now, here, when I have seen this candle close above this line, I just clearly told that I don't like this type of close actually. So I'm expecting the reaction actually from that -2 standard deviation. I'm not interested to see it will keep going higher and it will come over here. Before coming here, this market has to do some kind of reaction from that -2 standard deviation because it was just okay, just two handle above that line, which is -2 standard deviation. So I was not so much confident about the buy run. So I was more interested to look for sell the very next day after clearing that shallow run or obvious liquidity by the body close. It has absolutely trade that -2 standard deviation. Was expecting some kind of reaction from this line. Over here, all of these things, if it is understandable to you, now I would love to add the order block from the daily chart. Okay, so this is that buy run, then market fall. This is that bullish gap over here. See this candle. This is the specific candle that has closed above that candle. So it is my order block now. So if I mark the order block around here, this is the order block of that daily candle, the daily bullish order block. This is the lowest down close body close candle which has traded this bullish fair value gap. Then that specific body has closed above this candle. Now this is my bullish order block. What is my bias? Of course bullish until -2.5 standard deviation because body has closed above this -1.5 standard deviation. Before this order block has been appeared over here, I can expect that it will fall until these bullish fair value gap bodies are going to be respected with the upper portion of this gap. That is the sign I'm extremely bullish. Then I had to wait for a body close above this -1.5 standard deviation. When it is done, I'm looking for the buy again. Where? Until -2 standard deviation. In the meantime, when this market has traded this order block, now as well as you can do the same thing for the mean threshold or the 50%. As you can see, market never trade the 50% or the mean threshold of that order block which you have seen around here. Remember that bearish order block, how beautifully it has been traded the mean threshold, but here it didn't trade the mean threshold. Absolutely okay, I don't need to see that. Instead of that, all of this information you can expect for being of extremely bullishness. When this market has traded this order block by that candle and that candle, then came here, there is a fair value gap. So I need to mark that gap now. Around here, this is the gap. What I should expect after trading the order block, I should expect that this gap should be an unfilled gap. So this gap is not going to be filled by the candle 100%. It should not do that. Okay, it should not close this gap by 100%. Now you can see a small portion of this gap is still open, so I'll just let me mark it. So you can see this small portion of this gap is still open. After trading the order block, you will always expect that this should be the unfilled gap. Okay, market came here to -2 standard deviation. Next day I'm going to expect it will come to this gap, but this gap is not going to be filled 100%. Instead of filling this 100%, it will keep going higher. At the same time, I actually marked that week in that specific day. If you guys remember, that was the upper quadrant of that week, but later I find out that I should not use this week. The reason is this week didn't trade any fair value gap, so I would love to be strict with the week that should be traded any kind of fair value gap. As it didn't do that, I don't want to use this week at all, even though I have used that week in that specific day and I told that I would love to see it will tap to the high upper quadrant of that week and then it will start to go higher. I would love to remove this week because I don't want to use that week anymore. I need some week that is more specific and valuable. Okay, so that has traded some gap. For example, this week it has traded the gap and the lowest week I can use it. This week this it has traded a gap and the lowest week or the prominent week I can use it, but it didn't trade any fair value gap over here. So if it doesn't do that, I should not use that week for the quadrant levels. So here that is the unfilled gap, and then this market fall, left it unfilled, I'm bullish again. How long? Until this minus 2.5 standard deviation. Remember, I'm expecting that this market is going to make the all-time high. That means this bullishness. You are seeing this all the bullishness, right? From here, that low was predicted by me. Very specifically, that low was predicted by me when the market was here. You can see, watch the video from Monday 7 April 2025. Before that, so here I think it was 28th of March or 29th of March, around here. Okay, I I explained that this market maximum can fall until here. All of these things was happening from here when this market made another all-time high. That was another all-time high. Trust me, guys, just go in that specific areas by my live streaming. You will be able to see that it has been marked by myself. So it has been built all-time high over there. Then this market started to fall when I got the confirmation. Like here I have explained, when the bullish order block has bearish order block has been broken. Same thing I have done over here when I've seen the any kind of bullish order PDR was been broken. I have predicted that low. I clearly told in that area, I mean, in that area when actually I predicted that is gonna be the lowest low. I told that don't trade over here, just invest money over here. Put your money to take the buy. That was an expected low. That market is going to make the lowest low over here. After making this low, market will start to go higher again for the buy side liquidity. That was the buy side liquidity actually. And then this all-time high I have predicted again when this candle has been broken over here. By that specific candle, I have predicted that all-time high. So right now, I know that guys, this is gonna be a bit longer video. I'm really sorry for that, but I have to break everything over here step by step, so that later you will be able to understand whole price action step by step, how you can think about the market every single day. So when this was unfilled gap, I was extremely bullish, and you can see this candle has closed so beautifully. Okay, not like this type of 2 or 3 handle close above the line. No, a perfect closing above this line. Come back again, tap to this unfilled gap over here, took the liquidity from our lower time frame. It has traded a lot of things over here, and then next candle, boom, market, boom, just boom, come until here. Now, when this candle closed here, am I done? Am I looking for sell anymore? No, I am still bullish. Why? Market didn't tap to this line, right? You can see that specific candle. It didn't tap to this line. Next day, first market open, tap to this minus 2.5 standard deviation. I'm done. No more buy is valid anymore. Now, keep looking for sell. Just sell, just sell, just sell. Finally, market trade this, and that was an indecisive candle. We have predicted this should be an indecisive candle. That means market should not expand too much. It should not do that. Next candle open. Where exactly it has traded, I will show that to you because it was absolutely outlined through my live streaming. Exactly, I told that it should be traded that before falling. Trade that area. More importantly, from the daily chart, minus 2.5 standard deviation, and boom, market came here. Where did it came? Again, this is that area from the weekly chart. You remember, that is that weekly chart, bullish fair value gap, and that week quadrant level, or the 50%, tap exactly to the 50% of that very prominent week, which is also called the last fair value gap. So exactly tapped over there, as well as closed around the 50% of that bullish fair value gap from the weekly chart. Coming back to daily chart one more time, that was a very nice reaction. Now here, some of you can think that actually Trump did the tariff, 100% tariff to China, so that is why actually market fall. No, it's just an excuse by the market maker. Market maker used that excuse, Trump's tweet, to let this market fall. There was no other reason why this fall from that line. This will prove that this market is algorithmic. This line has been marked from there, right? We didn't know that how far it will go. So we have marked the standard deviation level over here. Again, that is according to me. That is my standard deviation. So please don't get confused and don't say that ICT didn't say this should be marked. I love to mark this one because I get again and again the precision from that leg, not from this leg which has cleared the liquidity. This is my opinion, so I will say this is my standard deviation. I will take my responsibility. Okay, so it has tapped over there. Very algorithmic way market maker used this standard deviation, sent the market lower by ICT's sorry by the Trump's tweet. Okay, the tariff tweet or whatever it is. By using that, boom, market fall until here, stopped over here. Now, I would love to go a bit lower time frame. So I believe that everything I have explained over here is absolutely clear to you guys. What you should think in that specific day, maybe 1 day or 2 day, I'll be wrong. Okay, so 1 day, so not that 1 or 2 days, maybe I'll be wrong. But then every single damn right, every single damn right until this market reach over here. When it has reached over here, I am going to change my bias. I'm going to take the sell again because it now finally reached to the level I was expecting it should reach. Okay, now I'm coming to the hourly chart. So from the hourly chart, to be honest, I really don't have that much to say over here. Instead of this hourly chart, I'd love to go to the 15-minute chart directly. Okay, so all of this area now, if you remember, that is that last fair value gap over here. If you from this is that candle. Okay, so I showed you from the daily chart when this candle has closed above the bearish gap, bearish order block. Remember, bearish order block mean threshold. That was that candle which has closed above that bearish order block. Then market went higher. This is that last fair value gap from the daily chart. You have seen a long week. Remember, this is the upper quadrant of that long week. This was the upper quadrant. Okay, long week, and this was the last fair value gap. Over here it perfectly tapped to the low of that last fair value gap from the daily chart. Just let me show one more time so that everything is gonna be more clear to you guys, and when I'll be in lower time frame, you are not going to be get confused anymore over here. So here you are seeing, just let me remove this one. See this box, when I will mention this box, this is the candle which has closed above the mid threshold of that bearish order block. So this is that box. So let me change the color, actually red. Okay, so if you see, not the red, let me use the yeah, that's cool. So this is that candle which has closed above the mean threshold of that bearish order block, and I am now bullish. This is the last fair value gap. Let me change the color a bit deep. Okay, so this is the last fair value gap. This is that bullish fair value gap. From the lower time frame, you will be able to see this bullish fair value gap as a gray. Okay, so it will be this type of color. That is that bullish fair value gap. This line is going to be that quadrant level. Okay, that line or that weak upper quadrant, which I'm going to mark it a bit uh, bolder, and the upper one is the 50% of that specific week. Guys, again, I'm very sorry because it's gonna be a bit longer, but I have to use these things. And this line is the rejection block from my lower time frame. So I'm coming back again to this 15-minute chart. This is that whole area, that is that specific candle which has closed above this bearish order block. So I'm now extremely bullish. I'm not bearish anymore. So this is that last fair value gap from the daily chart. Market has traded, and this is that upper quadrant line. You can see here it has been marked upper quadrant. Okay, now over here, if you take a closer look, when this has traded, that last fair value gap from the daily chart, that big wick has left the last fair value gap. That means when it tapped here and it started to go higher, this is the first fair value gap. And after that, when this market is going to fall again, this will turn into the last fair value gap. So I'm going to mark that last fair value gap, and I'll extend it to my right. So this is important, actually. I'm going to extend it to my right over here. When market came here, it was the all-time high, right? That all-time high or the relatively equal highs, I have shown you from the daily chart that all relatively equal highs has been cleared by a shallow run, and then market actually cleared. This is that relatively equal highs or the shallow run. I'm going to mark it as buy side liquidity. Please don't get confused. This is that relatively equal highs or the all-time high which was above the minus 1.5 standard deviation, below minus 2 standard deviation. So and then it has cleared by a shallow run. So I'm going to go back to the 15-minute chart, and from 15-minute chart you can see this is that same relatively equal highs over here that has been cleared over here by a shallow run. First, I would love to draw your attention when this market came here. I have explained again why it was falling, and where did it came to the upper quadrant. This was the upper quadrant of that daily week. More importantly, it has tapped to the 15-minute last fair value gap. I called it the last fair value gap. Again, if you are really interested about this last fair value gap, please watch that video from the fair value gap concepts. I have already explained over there what is last fair value gap, what is anti fair value gap. So finally, this market came here to this last fair value gap, tapped to the upper quadrant of that daily week. That week has traded daily last fair value gap. After reaching over here, what do you see around this area? That was another week, and this was the exactly 50%. Remember, this was that exactly 50% where this market came back again to trade this 50% again. What do you see? Last fair value gap to that leg. See this leg? This is the last fair value gap. It has traded this last fair value gap so beautifully, as well as this is that bullish fair value gap where I told that I want to see the body should close above the 50% of that bullish daily fair value gap. So this is that bullish fair value gap. Finally, this market came here, trade this last fair value gap, leave that gap open over here. We should expect that gap should be open. Remember from the daily chart, I told you that I want to see this gap should be open. If it is not gonna be unfilled, then it can't reach to this -2 standard deviation. Remember these things I showed you two line over here. Same kind of concepts I'm going to use around that area. When it has traded the last fair value gap over here, I would love to see this gap will be open from 15-minute chart. It should be open. So I'm going to mark this gap over here from the same logic I showed you from the daily chart. So this is from the very lower time frame. Okay, so here you can see it tapped to this gap, but it is open. Now most of the portion of this gap is open. From the daily chart, it just left a bit portion of the gap open, but from the 15-minute chart, it left most of the portion open. That is the beauty. This is the beauty. It has to leave some portion of this gap open. The more it will leave open, the more speed you will be able to see. So here you can see it left a small portion open, right? Small portion was open over here. So what you are seeing? Consolidation, a bit consolidation. Here when this market leave that maximum portion open, just look at this, maximum portion is open, boom. Just look at the speed, how speed this market was. So speed, right, toward that all-time high, relatively equal highs, as well as this -2 standard deviation. After reaching to this -2 standard deviation, by the way, here is a lot of that was that clean lows. You remember I showed you that no weak candle, there was no weak candle, as well as it was the Tuesday that should take the Monday low. Okay, so by the way, that was not the Monday low, but from the daily chart it seems like the Monday low, whatever. That was that Tuesday candle. It should clear the Monday low, which it didn't do, as well as we had a no weak candle. So what market has done? Came to this last fair value gap from the 15-minute chart. Here, this is the last fair value gap from 15-minute chart. Trade this last fair value gap. Took that relatively equal lows, which was very clean lows over here. Took it, come back again to this daily bullish fair value gap, as well as this rejection block from the daily chart. Remember that line? Rejection block. What else do you see with that rejection block? Unfilled gap, or the 15-minute last fair value gap, or the gap you should expect it should be unfilled. So what is the importance of this information? So when you are marking something from your daily chart, okay, for example here I have marked that weak upper quadrant level. Now look, this upper quadrant level is aligned with the 50-minute last fair value gap. Then what I have marked? That specific daily week 50%. Guys, very important. I have marked that daily week 50%. What do you see over there? 15-minute last fair value gap. Again, then I have shown you the rejection block, as well as the liquidity below that liquidity. Rejection block. What do you see with that rejection block? Again, 15-minute last fair value gap, or the gap I want to see unfilled. By the way, this is also the last fair value gap. In very specific leg, this is also the last fair value gap. But still, I would love to see it should be unfilled. So your job is to mark the lines from the daily chart, and then you will come to your 15-minute chart to find out something. If there is something from 15-minute chart, that line is important to you. Just look every line, everything. Okay, let me actually mark that last parallel gap to that specific leg. Look how beautifully these lines are important. This line is with this 15-minute last parallel gap. Again, you can use this last parallel gap if you want. I don't have any problem around here and there. Okay, you can see this last parallel gap from that specific leg. This was the last parallel gap. So you can use this last parallel gap if you want, but I was really interested to mark this one because it has been absolutely closed by the body. So here you can see this gap has been closed by the body. So I didn't want to use this gap anymore. Instead of that, I wanted to use this that gap as my last parallel gap. But it's absolutely up to you. Whatever you would love to do, you can do. But remember, this is that 50% of that daily week aligned with a 50-minute last parallel gap. This is the upper quadrant of the daily week aligned with the 50-minute last parallel gap. This is the rejection block from the daily week aligned with the last parallel gap. See the beauty of this market. This is why this is important to you. Finally, this market came here, unfilled, finally come here. Remember, the candle closed just 2 tick above this line. It was not my line. I wanted to see a kind of broken. This -2 standard deviation is going to be broken. I didn't want to see that, so it fall, leave this, made this bullish parallel gap from the daily chart. After trading this order block from the, what to say, I mean the daily chart. Remember that the daily chart, the daily order block is over here around this area. This is that daily order block line over here. After, look, this order block didn't align with any kind of fair value gap. There is no fair value gap. Do you see any fair value gap over here? This daily order block didn't align with any kind of bullish fair value gap. When it didn't align with any kind of bullish fair value gap or the last fair value gap from the 50-minute chart, just look at this candle. It didn't respect it. From your lower time frame, it didn't respect it, but that line, how beautifully it has been respected. That line, how beautifully it has been respected. Respected. That line, how beautifully it has been respected, because they are aligned with your bellwether, which is 15-minute chart. This is called the bellwether. So 15-minute chart aligned with the line from the daily chart is gonna be a very strong or very beautiful line to use as your high time frame PDRA. Order block didn't align with any kind of bullish PDRA from 15-minute chart, so it didn't respect it, right? So just, this is a live example, guys, so please take a closer look over here. Then market actually leave this gap open over here, cleared the high and then fall a bit one more time, tap to this actually bullish gap, perfectly came to this -2.5 standard deviation. Now when it reached here, what did I tell you? Now it's time to look for sell. In that specific day, when this market actually fall, where did it came? To this bullish fair value gap. Now this gap was not important to me. I'm going to show you why this gap is not important to you, was not important to me. I called it as a entry fair value gap, and I call it as a last fair value gap. Okay, so that was the last fair value gap and that was the entry gap. Now if you see here, that specific week or that candle tapped to this entry gap and then it went higher, tapped to this -2.5 standard deviation. After that big run, I really don't want to see another big run. So in that specific day, I was saying that it's going to be a consolidation day. That means market will be in the range bound, and it absolutely did the same thing. It was in range. So it started to fall from 930. What was the 930? So it started to fall from here. This was the 930. Market fall here and then closed there. Exactly the range. That was the range in that specific day. From here to here. Look, just market fall until here, come until there. See, exactly this is called the range. I love, okay, it was actually closed here. So that was the closing of that specific day. It is called the range. After seeing the bull run, I was more interested to see a range day over here. So here market actually came to this entry gap. I was not interested to mark this entry gap. Why was that? because that wick has traded this gap. When the entry gap has been used already, I don't want to mark that entry gap anymore, so I will not see this entry gap anymore. Instead of that, I will look for this last gap. So if I am looking for the buying opportunity, if I would love to take the buy, first I'm not looking for the buy anymore. Why? Because market has tapped to this minus 2.5 standard deviation. So whenever I'll find a selling opportunity where we have framed a beautiful sell, actually I will take that sell. But for example, I would love to look for a buy, then I would love to use this last fair value gap to take my buy. Why? Because this entry gap has been already used. But why this entry gap has reused over here? I would love to go to the 4-hour chart. If I come to this 4-hour chart, you can see this entry gap and the last gap both are inside the 4-hour last gap. So this is the 4-hour last gap. This market fall until the last gap of the 4-hour chart. So from here to here, this is the last gap. Again, if I go to the hourly chart, same thing happened over here to that hourly candle. This is the last fair value gap. So this entry gap is actually aligned with hourly and 4-hour last fair value gap. That is why this market actually came until here and then respected a bit over here. Now that is not my intention, because I was not interested to look for buy. I was more interested to look for sell. And when it come until around some area, I told that it's going to be a consolidation day. It will never reach to this gap. By that specific day, it's not possible to reach until that gap, because it should work with here as a consolidation or range bound day. After the big run, come to this minus 2.5 standard deviation, the next day should be a consolidation or the range bound day. Then this is the Friday price action. Okay, so what do you see in Friday price action? First of all, when for the first time this market came to this minus 2.5 standard deviation, I'm done to look for the buy. No more buy is valid to me. I'm now interested to look for only sell. Every day I will keep looking for the selling opportunity. 9:30 is here. This is that 9:30 open. Okay, this specific candle is the 9:30 candle. That is the 9:30 candle open. Now when before the 9:30, I'm going to use the replay mode actually, so that you guys can understand what I mean to say over here. Until now, I believe that everything is clear to all of you guys. Everything is clear over here. Okay? So over here, when this market actually came to this, remember the last fair value gap, of course it can respect from the entry gap. I don't want to see that respect from that area, from the entry gap, but it was aligned with the last gap. So it came here, and then finally this market come here. When it come here, I have a lot of buy side liquidity over there. You can see this high and that high. They are the relatively equal highs. So I have first buy side liquidity here, which I'm going to mark as a bold line. This is the buy side liquidity, because this is the relatively equal highs. As well as you can see market has built another buy side liquidity below that buy side liquidity over here. So I have two buy side liquidity around this area. What is my expectation? Bearishness. I am more interested to look for the bearishness. So can this market leave that buy side liquidity open over here? If this market leave that buy side liquidity open over there, which is relatively equal highs, that means after fall a bit, it will go higher again for that buy side liquidity, because it left that resistance zone over there. So it can't leave that resistance over here. It should take that resistance. So people who are seeing this is double top, this is double top, and took the sell, they should get stopped out before that fall. That is the logic. So if you are expecting the sell, first you should wait for the liquidity or the buy side liquidity or double top, triple top should be taken before the falling. Now you can see around 9:30 market open. This is the 9:30 candle. Okay, so market open and exactly tapped to this minus 2.5 standard deviation. Now this was enough. Simply this was enough for falling. Why? Because this is that minus 2.5 standard deviation, but I wanted to see it will tap to this last fair value gap. But because the last fair value gap, so far you have seen that the beauty of the last fair value gap is so important to me. This is the last fair value gap from that specific leg with the volume imbalance. This is the last fair value gap. Okay, over here, where did it came? Minus 2.5 standard deviation. What is that line level exactly? Entry fair value gap. Can you see the entry fair value gap over here? This is the entry gap. Now if it reverse from there, it is going to reverse from the last entry fair value gap from the 50-minute chart. What did I say? No, I don't wanna see this entry gap is going to stop the market and send it lower, because it has been already used here. See this candle, it has tapped to this entry gap, then it has been rejected from that gap. I don't want to see that this entry gap is going to be reused. I don't want to see that. At the same time, from the hourly chart or from the 4-hour chart, look, this time there is no fair value gap. Here you had the fair value gap right here. That is why the entry fair value gap has been reused, because it was actually using the 4-hour and hourly last fair value gap. This was hourly and 4-hour last fair value gap. That is why this entry fair value gap has been reused. But here, when I'm going to mark this entry gap from the 15-minute chart, there is no gap from the hourly or 4-hour chart. So I don't want to see that this entry gap is going to be reused from the 15-minute chart. Instead of that, it should tap to this last fair value gap. I clearly or repeatedly I was asking the market or around this live last Friday live that please trade this last fair value gap, because if you don't trade this last fair value gap, this whole fall will be invalidate to me. I'm not in I won't be able to frame any kind of sell from that area, because it is not prominent to me. It is not something very clean to me. Even though the buy sell liquidity has been taken and minus 2.5 standard deviation has been traded, of course it can start to fall from there, but I want to see more precision. That means this last fair value gap will be traded, this high has to be intact. Market should not take this high. If it take that high, that means it's gonna be a kind of not so beautiful fall. It's going to be like consolidation, something like that, because this is the extreme high that has been traded the minus 2.5 standard deviation. After trading this minus 2.5 standard deviation, this is the extreme high. That high has to be intact. So what happened? The next candle trade, what did it trade? The last fair value gap. Failed to take that high. This is the high. I don't want to see it will be taken. Okay, so I'm going to mark another bold line. This should not be taken. Traded the last fair value gap. Bodies respected the minus 2.5 standard deviation. That means it didn't close above this line, which is saying me now I can use this minus 2.5 standard deviation as a resistance. Took the buy side liquidity, both this buy side liquidity and that buy side liquidity has been cleared. Everything has been cleared over here. I don't need to worry about the buy side liquidity left, because market didn't leave any kind of buy side liquidity. Traded the last fair value gap, traded the minus 2.5 standard deviation. Any kind of fall is my sell for where? This sell side liquidity. Look over here. Another obvious liquidity was over there. That means this low has taken over here by a shallow run. Okay, so you can see here this low has taken over here by a shallow run. That means a wick just went a bit below of that low. It is called the obvious liquidity. So I would love to mark that specific low, which is the shallow run low, as my liquidity. So I'm more interested to see this market will fall until that sell side liquidity when everything is done over here. Would love to go to 1 minute chart, and that was the 1 minute chart. If you guys remember, we have framed the order block actually. So there was the order block. Just let me just I'm going to go all of these things area, and that was the buy side liquidity. After building this buy side liquidity, I told that first this market has to take this buy side liquidity, which it has done actually. And just a second, here the buy side liquidity has been cleared here. That was the liquidity taken around that area. After clearing the liquidity, I waited for the order block to be validate this fall. So here that was the candle which was the order block. So here extend it to your right. That should be the order block, and entry should be from that order block. Stop loss has to be above that candle, just 2 tick above that consecutive order block, and your target is gonna be there. Okay, that's going to be your target. The entry has to be within 5 candle, maximum 5 candle. So that is the first candle has provided us the entry over here. That was the entry, and then boom, Okay, that was the boom. Then market keep falling actually, and we have a lot other to explain all of these things. So guys, I hope that after explaining this whole price action, I believe that you have learned a lot. Now from the weekly chart you can see, sorry, not the from the weekly chart, from the daily chart, I have a lot to explain for the next week. So either maybe I'll make a video, otherwise I'll do it in live, so that you guys can see what is going to happen next, what is my expectation, and how I'm going to outline the next few days. What is my all? I will either make a video, or maybe I'll just explain it through my live. Okay, so until the next video, I really would love to ask you guys one more time, please don't forget to push the like button, don't forget to subscribe to our channel if you are new, and please write down any kind of confusion. If you have any confusion, let me know that through the comment box. I will appreciate it, man, because it's really so difficult for me to make a video and then upload it, and if I don't get the reaction from you guys, if I don't get the comment from you guys, I can't just keep continue these things or sharing this information for free at least. Okay, so please help me by writing your problem to the comment box. If you have no problem, if you can understand everything so beautifully, please write down boom to the comment box. So until the next video, cheers guys.